pushes this thing lower. If FOMC minutes this afternoon is really the only major news, are things pretty quiet this morning going into the news. Gamma levels this morning, pretty evenly distributed. The gamma pivot point is around 67.25. We are looking to open up a tiny bit higher. So this would be about 0.13 higher. You can see here that on the SPY side, possible resistance up into the previous highs. So if I'm selling bear call spreads, I'd like them to be higher than these gamma levels or above the recent all-time highs. Go back to SPX. We're looking to open up about 0.13 higher. That might put us up into positive gamma for the morning. I think as long as I can sell above 55, that's a pretty decent spot. So let's open up around maybe 0.13 higher. So we're opening up right around 67.20, right at that gamma pivot. So if we get above that, it's positive gamma. Do we drift up into the 50-55 zone to try to poke all-time highs? It's possible. Okay. But if we stay in negative gamma, slide here, consolidation. Does it break down? Do these open up and get a little bit wider? Right now, the bigger flows are calling for a push to the upside. I'll pull up one more workspace and look at the VIX. VIX trading at 17. So 17.1. This would have been yesterday. VIX spiked up to about 17.5. Recap from yesterday's daily profit play. We had a winner. Didn't force anything else for the afternoon. Small gap up. Had a winner for 28%. Price was sliding lower to 6,700 lows. That 6,730 was the gamma pivot. Price bottomed out at 6,700, bounced back up, finished at 6,714. Did it finish between the 50s? No. It was very close to the bottom 50. Here's the screenshot. So very close to the bottom 50% ATR, but technically below it by like 4 or 5 points. Okay. But did we win the day? Yes. So that is good. So today is a new day. We'll see what we get. Let's bring up the option chain. IV rank going up to 17.9. Let's have a look at the option chain here. October 8th. Plus or minus 27.7. So, we could probably get 30. I mean, we're going to open up around, I'm thinking 25 to 30 based on a 0.13. So SPX, we open up about 0.13 to 1.4 higher, about 67.20. So we should be able to get into like the 50s and 60s on the bear call spread this morning. And on the put side, 14 down to 80. It's like we're going to open up a little bit higher. But yeah, I mean, I think if we get above this pivot around 67.25, we drift up into the 67.40. Maybe getting in I guess an iron counter makes sense, obviously. Like if I want to do a put spread down here and bear call spreads, I'll probably do multiple bear call spreads up here, trying to stay out of the way. This could be a lot of indecision for the week. Then we'll wait for FOMC this afternoon, but enough for us to grab some bucks this morning and then see if FOMC gives us any late day volatility. Okay, hopefully we're out with a winner prior to that. So there's no drama. Okay, Fed remarks. What Fed remarks? There's lots of them. I know Stephen it's Moran, I think. Stephen Moran. I'm looking to see like what is the commentary. Do we have any commentary in headline news? Cisco, Besant. See if there's anything on Fed. Anything wild and crazy happening on the currency strength with Japanese yen for day 3 since we had a massive gap on Sunday, Monday? Bank of England. Euro yen slide for third straight day versus US dollar. Okay. So here is today's currency strength. We had RBNZ cut rates again last night. There's the big drop around, it's like 9 p.m. Eastern time. It's worked its way back. Japanese yen getting into weakness again. Still pretty contained considering what we saw. I think Sunday to Monday, it was like, this currency strength, the vertical axis was like over 200. We had like a 300-point gap on Sunday to Monday with the Japanese yen. So that doesn't seem like something I want to fight. But it looks like S&P is around 67.70. No, that's not right. You can even go, this is the CFD cash at 67.31. This is live price. So we're looking to open up. You have futures maybe, right? Futures at 67.70. So S&P futures at 67.70, but not S&P. Yeah. It's not the same. So futures 67.70, SPX is 67.30. We're probably going to open up here. If we close at 67.14, we'll probably open up around 67.30. If you want to get like a live feed of the S&P on TradingView charts, go to SP 500. That is a CFD. So that'll be your live feed. So we might have a little bit of a gap higher based on the close at 14 yesterday. So this is the close. We'll gap up a little bit based on the futures price action overnight. That's where your CFD comes in right here. Okay, this is your close here's your 4 o'clock close. Just a little bit different. All right, let's go back to the daily. So is yesterday a decisive candle? Not necessarily, right? See the lows, see the highs. We could still be inside this range. I think this is the range to watch. Either we break and go higher, we break and go lower. I will give us similar to what I did with the FOMC candle. If you remember that from a couple weeks ago, this was our FOMC news candle. We broke and went to the upside, so we were bullish. Okay, now that we have some range trading in here, do we break and go to the upside? I'd measure that move, or I'd measure this move. It's really price action's job to give us confirmation. Okay, so we'll see how this plays out. Let's see here. Pre-market futures, NASDAQ futures up a little bit. Russell was down yesterday. Dow was down yesterday. VIX was up yesterday. Heat map. 67% of stocks red yesterday, and the market's barely budged. So, Tesla down 4.5% yesterday. Software down quite a bit. Even semiconductors down mostly. NVIDIA flat. Oracle down 2.5%. There's some pretty big swingers there that are all like bright red, and the markets were like, how about 0.3% to the downside? So, consumer defensive. If you're interested in a very cheap value play, consumer staples are really, really cheap right now. Like one of the biggest stretches since like 2000. If you go to sector performance and go year to date or even 5-year, look at this outperformance. Consumer staples at 20.65 over the last 5 years versus 142 versus 196. It's kind of crazy, isn't it? Last 1 year, consumer staples down, tech, communication services, which is mostly Meta and Google. I think Netflix is in there as well, but underperforming. This year to date, it's the only sector that's negative. So, not saying it's a great place to be parking some cash, but it's certainly one of the undervalued sectors. When does this do well? Well, when times get tough. So, I actually think, um, I think for Project Options Edge, I'm probably going to throw on a trade today. Can do a ratio spread or some naked puts, maybe a naked put combo. 2023 all the way down to 60. I mean, we'll see how far out I can go, but it's one of the few sectors that I'm not chasing all-time highs right now. So do we pull back into this area? Can I play it out far enough to play it out into this area? I mean, we'll see. I mean, if I could get a discount on this thing down to, 2023 lows, 2022 lows, I would welcome that with open arms. Yep, all good restaurant stocks are cheap. Yeah, I mean, again, sector wise, you're going to eliminate a lot more volatility than would in individual stocks. So stocks like that are down. I think part of it's just because food prices have been consistently higher, and I mean, go to Chipotle. It's like it's $17 to $20 to walk out of there with a burrito, a salad. It's expensive. It's like going out to eat is expensive. Even fast food like that. It's technically not McDonald's. It's not Wendy's, Burger King, but it is fast food, and it's 15 to $20. It's the same as going to like your Applebee's, TGI Fridays, Chili's. Like the prices are the same. The difference is you're not tipping anybody. Okay, maybe you are. Maybe they're turning around the portal like, oh, just a couple of questions. When you feel obligated, like, do I need to tip you $1 for just handing me a bag of food? Crazy. I know it's been a joke, but anyway, I'm liking XLP. I think it's as a beat up sector. If I can play it cheap enough, it should be a good income trade. But they're not fun stocks. Like they're stocks that have been down for a reason. There's a reason it's underperforming. I certainly don't want to get into the trade thinking it's going to be dead capital. It would be more like, can I take a good trade with income? That's going to be the play. If we start to, struggle consumer wise, then they probably pick up a little bit. But I don't know. I don't think this market wants to go down. It's going to. It's going to have some pullbacks. But I think until there's a big problem with CapEx spending, or we have some huge whiffs in earnings, the market doesn't care about anything right now. I think that's really the play. So I wouldn't be surprised if this market is blinders on, all systems go. Let's get to 7,000. I've seen a lot of people that I've followed over the years that have raised their targets to like 7,400, 7,500 by 2026. So we'll see. Going into the end of the year, we have that JPM collar trade with call resistance around 7,000. It acts as two things. One is it's a ceiling, and the other is it's a flow to hedge to. So if we're going to get there, it's like we've literally for the last 2 quarters, we've tested the JPM collar ceiling for the last 2 quarters, and we closed above them for the last 2 quarters. So it's just a lot of activity. So I'm just putting 7,000 on the map as a potential magnet for price, which means any pullbacks that we pull back into these areas, double ups, waterfall income, daily profit play. We need to be aware of these on our charts so we know how we can be positioning for some dips. If we go out for some duration, I'm talking maybe a couple weeks, maybe a couple months, but I'm positioning for, any dips to be scoop back up and we head into a Q4 that finishes strong, I would think. But I'd certainly like that pullback before this thing just keeps running away. I don't like what this has been doing. Like this pullback, fine. This pullback's fine. This pullback's fine. Now that we've had fresh multiple, we're at 32 all-time highs for the year. And we have not had more than, this is a 1% pullback. This is less than 2%. This is all 1% or less pullbacks. So come on, man. Give us a little something. TransUnion is given SPX range daily. Can these levels be trusted? I mean, what do you have? What are you going to compare them to, Sandy? I mean, if you want to give it based on, I mean, it's gonna if it's gonna be like a like R1, R2, R3, or an S1, S2, S3, it's just gonna be the previous day's high, low, close. That'll give you the pivot on the day, and then you have your support resistance pivot calculations. It could be something along those lines. Could be a very traditional pivot calculation. I'm basing mine on a 5-period ATR. That's where my daily profit play ATR levels come in, and then I take the VIX value divided by 16, and that prints my yellow box. So that's what I like to use. The range daily levels, I'm not sure what they're using. If it's just a typical pivot calculation, that doesn't necessarily correlate, in my opinion, with ATR necessarily. Nothing like that, but levels. Yeah, I don't know if you want to, send me an email and give me a comparison. I'll compare it to like a daily look at what I have. 50, 100, 150 ATRs, VIX box highs. I mean, if I wanted to be trading with a lot of certainty of like, I don't think price will hit this level, then I'm trading up here towards like the 125, 150 ATR, 125, 150 ATR down to the VIX box high and low. I would say if price goes even directionally for the day, rarely do we see prices exceeding those levels. And that's on a very directional day. So just not sure what levels they're calculating. How about if you just use deltas? I mean, you're not going to get deltas on your charting platform. You get deltas in your broker platform. And again, deltas are not guaranteed either, because what happens today when the market maker expecting moves about 30 points. So that tells me that the 25 to 30 delta is going to be about 28 to 30 points away. Okay. So what happens if the market moves 50 points? Well, we can start out trading a 10 delta call and a 10 delta put. And if price gets directional, we can test that 10 delta call and put. Even though it's outside the expected range, even though that's a low probability, we have seen trades that when the market gets directional, we could test a freaking 1 delta in a 0 DT environment. So, I mean, deltas, the expected move is the 30 delta is around the expected move. That's why we trade the 15 and the 20 deltas, because that should be outside of the expected move day after day. Pretty good probability profit every single day. Right? Most of the time it is. Most of the time you're going to see it stay within that range. But if it doesn't, those deltas in the single digits get tested when you have a directional day. Okay. All right. I'll take a screenshot of that, Sandy. So 9, 10. Oh, that's the ninth. Oh, geez, those are really tight. You're talking levels within just a couple of dollars. I mean, I don't know what those levels are. You're talking about an SPX daily high, daily low. What? I mean, those are only like $3 apart. I mean, yesterday we saw like 50 points of movement. So yeah, I don't know. That seems weird. As far as if you're calling like daily highs and lows, I mean, you should have like a 30, 40, 50 point range. I mean, market maker moves, expect to move based on current volatility. All that stuff should factor into highs and lows. Hmm. Yeah, I think that the Friday, especially like 67, 13, 17, and 15, you're talking about pinning an SPX within a 4-point range. I'm not sure what they're doing there. So, anywho, here's the plan for today. We've got gamma levels up and down. Let me open up some dynamic trend here. Gamma pivot is 67.25. So if we open up with a little bit of a push higher, okay, this would be my inefficiency right here between 25 and 30. 25 and 30 is my inefficiency from yesterday's sell-off. I think that's the critical spot. If we are here, and we reject and start to sell back off, or we're here and we stay above it and we start gravitating towards these call levels. So my plan for the day is going to be, if price wants to get, it's going to be gapping up a little bit. Okay. I want to see if price can push up into these levels. I will be looking to sell calls up here. Okay. So if we're up to about 67.55, that should be, I mean, I probably would position myself just above this 100. That's 67.60. So that's a little bit clear of the all-time highs. If I get like a 60 by 65, 60 by 65, 70 by 75 in this zone, probably looking for the $1 bear call spreads out of a 5 wide. That way price goes up, we give ourselves some cushion. Okay. That's at least my initial plan this morning. So that's probably a pretty low delta to start with, because I'm probably looking 35 to 40 points higher than open. Maybe 30 points higher. So we'll see. I think I'm gonna go with those numbers. I'm gonna go like 60. Look at the 60 when it opens up. So I'll look at like 60 or the 65 by 70. I'll start somewhere in there. Either 60 by 65 or 65 by 70. I'll start in there for my bear call spread. And then I'll look at a daily profit play since it is Wednesday. We have minutes this afternoon at 2 p.m. If the market's going to be calm going into FOMC minutes, then enough for us hopefully see just some jostling and we can grab some profit this morning on a daily profit play. Okay, so pivot at 25, pivot at 25. FOMC, it's just minutes today, so it's just going to be like a canned release at 2 p.m. Eastern time. Yep, 2 p.m. Eastern time. All right, we've got an opening bell in about 3 minutes. Futures is now up to 0.2% higher, so we're opening up a little bit higher on the gap side. Let's go to... Okay, this is happening live right here. So a little bit of an uptick in futures. So somewhere around 0.2 higher. So we're probably opening right around that positive negative gamma pivot point. It's going to be critical to kind of see it either reject off that today or get above it, go into positive gamma, and then everyone's selling puts, everyone's selling calls, and the price is going to be in a low drift today, just because there's put support sitting there all morning. All right. I kind of like the 60 by 65 or the 65 by 70 to start things off this morning as far as bear call spreads. Put side, I kind of want to see, if we're here, do we go up? Do we go down? Does it go both ways? Negative gamma can certainly accelerate faster. So I want to be a little, conscious that we're gapping higher. But if we come down to support, that's going to be 30 points lower. It's going to be tough to get a put spread. If we're going to go to 66.80, that put spread is going to be tested today. I think it's a little bit easier if price is going to drift. We can sell high and not necessarily have our prices threatened. All right, we got 1 minute. So I'm looking, like I said, either 60, 65 or 65 by 70. That's what I'm going to look at this morning for bear call spreads. So get this ready. Price should be gapping up to about 67.30 this morning. So this will shift here in about a minute once we go opening bell. Okay. Bell's open. There's your shift to 30 or so. I'm going to look at the... So 60.65 would be, I think, right at the 100%. I've got right around 60. So I'm going to go see if I can get to the... I'll go 60.65 for $1. So selling the 60 call, buying the 65 call for $1. It's a pending orders trading about 45 cents right now. That's my 15 delta. Well, fudge. If that's right, 15 delta there. Just got filled on a butterfly spread for 15 cents. So that dollar is good for 85 cents, which is good, actually. That's another winner. So that would be the trade number 494. That dollar's closed out for 15 cents. And that risk would be 9. All right. So trade number 494 is closed out for a 15-cent debit. That's an 85-cent winner on those two broken wings. Okay, I'm going to go 60 by 65. And let's look at the put side here. We're into positive gamma right now. Let's look at a 15 delta on the put side. Can I get over $1? So bear call. $0.90. All right. So I can go bear call spread here for $1 or an iron condor for $1. All right, I'm going to try this trade for $1 for an iron condor. I'm going 60 by 65 on the bear call spread, 66.95 by 90 on the bull put spread. Pending order at $1. I'm not taking less than that. So if this wants to go up a little bit, I get filled for $1. And I'll throw in another bear call individually at 67.70 by 75 right here. Okay, I'm going to get these in Telegram for members. Okay, so DPP update. Trade 494. SPX. Broken wing with the 6825 pin price. Entry $1. Closed 15-cent debit. Nice 85-cent winner. Okay, new trades. Today is the 8th. 67.60, 67.65, 66.95, 66.90. $67.70. Okay, 2 pending orders for this morning. Still not getting filled in the $1. That is so the 60 by 65. It's gonna make me go lower in the call side. So I have to go more like the 55 by 60, which I don't love that. Fudge muffin. 37 is the 50% ATR. Let's see if we can get, so right now, delta wise, 50 by 55. Let me delete the iron condor for a second. So if I went 50 by 55, okay, let me see if I can get $1 on this one. So 50% ATR to the downside is 66.90. Just hanging right around that positive negative gamma pivot. What can we get? 60, 65. Okay. All right, it's going to hang out. So what it's looking at is we went from a 27, 28 plus or minus move on the day to now 20. It's going to force me to tighten up, kind of both sides of the trade, which is fine. I mean, we're still sitting at a VIX at 17, so I'm a little cautious on that side. But if we're just sit here and chop around for Wednesday morning, if we want to go 50 by 55, which is trading for about a 15 delta, and then I look at the 90 by 85, that gets me a buck 25 or $1.30. I'm going to take this trade here. See if we can get $1.25, $1.30. Try $1.25, $1.30. So $1.30 not filling, $1.25. This is a 67, 50, and 55 with the 90 and 85. Let's try $1.25 credit. Come on, $1.20. All right, just got filled for $1.20. All right, so I'm going to modify the Iron Condor. It is a 50 and 55. So 50 and 55 on the call side and 90 and 85 on the put side. That was filled for $1.20. So that's 50, 55. I'm going to go 60, 65 for $1. 10, 8 expiration. 67, 60. 67, 65. Okay. So Iron Condor trade is filled. 2 pending bear call spreads in Telegram. Matt, not sure what are you talking about here? Perforated lines and arrows. CFR 250 debit. That was a trade on pinch point. Pinch point. CFR, that was a trade filled at 250 debit. Okay, good. So CFR got filled for pinch point. Now I will set a take profit at 375. Okay. Update in pinch point. CFR pinch point trade update. CFR, this is trade number 76. Okay, pinch point alerts updated there. This morning, here is our Iron Condor. In for $1.20. Let's go after 90 cents or 80 cents. So 40 out of 120 is over 30. So 35 cents. So an 85 debit would be pretty mechanical. So go 85 cents, take profit. Okay, that's updated in Telegram as well. All right, back to your question, Matt. What do we have here? Where on your chart is your anticipated SPX daily range represented? Well, inside the broker platform, you have the plus or minus here. So you have the plus or minus move based on current volatility. My broker platform also paints that on the option chain. So this plus or minus 20 is going to be the high side of the low side of the strikes. So if I'm selling, out of the money bear call spreads or out of the money bull put spreads, it should be above or below this red box. So that's one way to get the expected move kind of highs and lows. So you can see here, if all things kind of go according to plan with the expected move, my bear call spread, bull put spread should be profitable, right? What is this 9085 working order? Oh, that's the closing order. Okay, so make sure I'm not overlapping trades. Okay, and then the other side of this trade, as far as so the broker platform has my expected move. We also have minutes this afternoon, so I want to be out of this trade before minutes this afternoon. I don't want to hold this trade until 2 o'clock. Okay, it's not Jerome Powell, it's not anything crazy, but it is an excuse for the market to have some volatility late in the day. The other side is based on kind of the daily extremes. The VIX is still trading pretty elevated around 17. A lot of this VIX elevation, by the way, is because of the government shutdown. There's a lot of uncertainty surrounding it. Price action has not reflected a VIX at 17. I mean, price is moving like we're at a VIX at 14 and change. Day to day, it's like we're seeing prices in between these 50% ATRs. So what I have here is this is based on a 5-period ATR on the daily time frame. So that gives us kind of roughly the current 5-day look back on what volatility has been doing in the S&P day to day, and then I take that and park those ATR levels on the positive and negative side, and I also take a box. This daily profit indicator is a shaded zone box that is the VIX live price divided by 16, and I preset this thing at the close of the previous day. So usually what we will not see is day-to-day price action getting outside of this box. Okay. So if I wanted to, sell high probability bear call spreads or high probability bull put spreads, this gives the market plenty of room to move. We don't get, I mean, these are not trades that I take. If I take this trade in the morning and I do a bear call spread up here and a bull put spread down here, it doesn't offer any premium. Okay, because they're so far out of the money. But if price goes up for the day, if I could pull in $1 on this trade for a 5 wide spread, the probability profit on that is pretty darn high. So I'm kind of willing to absorb that. That's not a huge risk. Risking 400 to make 100 is not a huge risk, and I would plan on making most of that profit because it's far enough out of the money. Okay, so a couple ways I just kind of tackle price action day after day. And then the lines here, that's the opening bell. So opening bell right there. So I want to get my tracker updated here. We have 2 trades running. So daily profit play trade number 501. By the way, did everyone get the broken wing butterfly close? If you're in daily profit play alerts, did you get this one closed out? It was a 68.25 pin price. So it was a 20 by 25 by 40. Close that out for 85 cents profit. So that's 85 cents on those 2 broken wings. And I'm happy with that. That's clearing $170 with no risk going into the rest of the week. Okay, very good. All right, let me get the ATR levels updated in the tracker. So in that ATR tracker tab, today is the 8th, and we have the 50% ATR up, which is at 67.34. 100% ATR up, which is 67.54. And 150% ATR up, 67.75. %, ATR down, 66.93. $66.73. 66.52. Okay, so small gap up, FOMC minutes at 2 p.m. Eastern time. Morning trade, we are in a DPP standard. Price is in between the 50% ATRs for the morning. Okay, and we'll see how that kind of evolves through the day. Randy says yesterday. Well, the trade was taken like a week or two ago, Randy. I think that trade was taken a week ago. So it was just a closing trade this morning. Will you cancel the 2 open orders prior to the minutes? Not necessarily. Not necessarily. Because if I look at the day, I mean, unless, I mean, I guess what I could consider is for FOMC minutes, if we're going to get some like big afternoon push, maybe I would consider pushing my bear call spreads up a little bit higher, maybe up towards like the VIX box high, but I don't know. I think I'll let it marinate for the morning. If we get a winner on daily profit play, then I might shift them up here higher towards like the 75 and the 80 zone, just in case the market's going to poke highs and try to get above the 100% ATR. But I'm curious, like what the VIX is doing. If the VIX is still at 17 and going somewhat higher, it's like it doesn't make a lot of sense that the VIX is going up and the S&P is still melting up. It's kind of a weird market right now. So, I mean, to be safe, sure, cancel those bear call spreads. But if I'm putting one in at like 60, 60, 65, that's above all my call resistance, that's well outside the expected move for the day. I mean, I wouldn't mind like taking that stab at it. Maybe I bump them up by 5 points, right? Give myself a little bit more wiggle room. But if I'll tell you if I cancel it, I'll post in Telegram if I cancel. Otherwise, I'll let it go. That's a good question though. Okay, and for the morning, we are sitting, pretty choppy. We're sitting right at that positive and negative gamma pivot point. You can see it on this dynamic trend as well. If I've got any double up members, a double up into this 50% ATR seems like a doable play for the morning. That's around 35 or 40 for a quick winner. Looks like it's going to try to get there. But if it just sits here and it's choppy around that pivot point, you can see that the major catalyst is going to be FOMC. Does that move the market this afternoon? Yes, no, maybe so. Does it sit here and do nothing for the entire day, and then Thursday, Friday is big direction? Maybe. But as far as where the flows are looking right now, it doesn't seem like the bear side is lining up at all. Bullish side just has some magnets around this 39 to 40 handle, so 67.40 or so. That 50% ATR is 37. But we're just kind of stuck right around that pivot point. I would imagine the way the market's been drifting is we drift higher. We drift higher to 38. We drift higher to 40. I'm just hoping we can sneak in a profit for our iron condor. Okay. Waterfall, 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 waterfall. I might take profit on this one here. I've got one waterfall trade that's up 84%. It's only worth another $8 to me. I'm going to go ahead and take profit in this one for waterfall. This is a SPY trade. So we can pull in 50 cents is showing, should be trading for like less than 10 cents. I'm going to close this one down. See if I can get this 9-cent. 9-cent debit. I mean, probably the profit should be pretty darn high. Yeah, 99. I mean, if I'm willing to wait a couple more weeks, I don't think we're dropping to, 548. What would that be? If we drop to 548 on the SPY, that would be pretty outrageous. 548 on the SPY from current price would be, oh my gosh, I've got to zoom way out of this chart. 548. Is the market going to drop 18% in 2 weeks? Probably not. So what I'll do on this one, I'm going to set this one at I'll go 5-cent debit. Let's go. I mean, if I can get out for 8 now, I'll just close it. It probably won't fill though. If it doesn't fill at 8, I'll put it at 5. Not filling. All right, I'm going to put it at 5 cents. 5 cents debit. Just need a little bit more time, and I'll take 45 of the max 50 there. This one is up. I'll do the same thing here. I'll do 52. I'm going to go a 7-cent debit. And we got a nice little winner here. 35 and 40 out to January. Max profit on this one would be $1.62. And we're up 73 bucks. So $162 is my max. I'm up about 70 bucks. I've got a bit more to go. Think if we can push this one into the $100 range for profit, I think that looks pretty good. So I'm going to do a quick update. Deanna, this update's coming your way. Let's go to everyone can see my screen, right? I think it was because Deanna had the screen up early this morning. Can everyone see my screen? Yeah, I'm going to get that updated, Sean. Give me a second. So waterfall income. All right, I'm getting this one uploaded here. So it was in October 31. So it's trade number 103. All right, so waterfall income, trade management, trade 103, SPY. Entry was 51 cents credit. Setting. Feel free to close this trade for 10 cents debit or less. Should fill now. I'm setting a 0.05 debit for the close. Okay. And then the other one is in 11/28 expiration on the SPY. And that's trade number 108. Trade 108, SPY. Entry was 52 cents credit. This trade for 10-cent debit or less. It's trading for 14 debit now. I'm going to let it go a little bit further, and I'm setting a 0.07 debit for the close. All right, that's updated. I didn't take the trade there, Ed. I was saying that if we have a double up strategy going towards like the 67.40 level to kind of pin that price. Okay, I'm going to look at the Qs really quickly. Some waterfall trades in the Qs. This one for November, it's up 80%. I'll set this one at 5 or 6 cents debit. So I'm gonna add a couple more there, Deanna. Hang on a second. Waterfall income. Let me find that trade. That's a QQQ trade. So that's November 21st. Trade number 107. QQQ. Entry was 51 cents credit. I'm setting a 0.06 debit to close. And the other one, trade number 55 and 7. So trade number 105. Trade 105, QQQ. Entry was 50 cents credit. setting a 0.05 debit to close. Okay, so this one I'm going to try to close for 6 cents debit. And this one I'll close for 5 cents debit. Okay, we can let those marinate. So it gives us, I mean, if I close out for 45 of 50, I'm making 90% of the credit. If I close out for 46 out of 51, 90% of the credit. I'm fine with that. It's more capital efficient versus waiting into the November expiration. Let's grab 90+% of the credit, not worry about the trade. Okay, so that's 1, 2, 3, 4 trades. Yep, those are all waterfall income, Diana. Yep, all for waterfall income. Yep. So that's 4 trades looking for 4 winners on waterfall income. And that also will help free up additional buying power, which is good. They were not SPX trades. 2 of them were SPY, 2 of them are QQQ, but they're index related. Okay. So posting those SPY trades, Q trades, SPX. We have a couple waterfalls. I'm going to let these go a little bit longer. So this one's out to December, December, December. I'm getting rid of the October, November expirations. Those are just near term. And then today, not sure how this is not profitable right now, honestly. Like this is an FOMC with Jerome Powell. Like this is some BS where we got to sit here and wait for this thing all freaking day when the price action is doing nothing. Our call side is 50 by 55. We're trading at 26. We're outside the expected move. I guess we just need a little bit more time. Is anybody into standard daily profit play right now? 10 wide, 15 wide, seeing some profit. Okay, Greg says no profit to speak of. Okay. Yeah, that's kind of weird. 28 minutes. And again, I don't think this is going to be treated like an FOMC with Jackson or, the Jerome Powell Jackson. What am I talking about? The Jerome Powell FOMC, like press conference rate decision. It's not that. That'd be at the end of the month. The last time we took that, I mean, the last time we had that experience was, we'll zoom out here. We had that big noisy FOMC day, right? This was FOMC. So we sat in the trade literally all morning and had a $10 or $20 loss to show for it coming into FOMC. We decided to be brave and ride it out, and it was noisy and crazy, but we ended up grabbing I think it was like a 30% profit target. But we had to take a morning trade that should have been perfect for the morning, but all of the implied volatility was stuck to the afternoon because of that rate decision. So I don't think there's no reason for today to be treated that way. But that seems to be what price is doing right now because we're perfectly centered after almost 30 minutes of trading. But whatever. I mean, we just need some time. Time decay is our friend. We go another, 15, 20, 30 minutes. Hopefully by the end of today's session, we are good. So, and I mean, the only way my call side is threatened is if we're testing highs again. Put side is threatened, we'd have to be below the lows. So as long as we are, under here and above here, our trade looks good for profit. Okay. So we'll just let this thing ride out. Profit target's already set. So we'll just hang in there and it's trading for about break even right now. Brett says Dallas 75 entry, trading at 155. Okay, good. Mark says 15 wide evens. Got it. Mark looks like you adopted the Dave style of daily profit play. You like the 15 wide, fill them in, huh? Nice. All right. Let's see here. Yep, that's fair. I mean, if you're looking for that, then I mean, if you want to go quick profit, 10% to 15% will do it all day. You'll have probably 94, 95% winners if you're going 10%, 50% take profits, which on a 15 wide, it gets the job done. So food for thought if you like that. Yeah. Holding the close is always it's always a you have no buffer. You have no room for error if you're holding the close. So I'd say if you're taking, daily profit play strategies, ideally you want to be out of these trades by like, between noon Eastern time or maybe one or two at the latest. Taking these things into the close would only be if like you're trying to ride them out for winners, but that's why the defined risk is so important up front is you don't really want to take those full losses if you don't have to. Because what you will see routinely is, when you have a winner, it's over pretty fast. Usually winners only take, the first 60 minutes, the first 120 minutes of trading. Anything longer than that, there's something kind of weird happening where it's like, why is this taking so long? You know? All right, here we are getting a little bit of direction towards that 50% ATR. We are kind of making more of an affirmative run towards positive gamma, just reinforcing this same market, perpetually feeding the zombie up, up, up. There's a call wall here at 40 and 45. So I mean, if we hit resistance, that 50% ATR could be some decent like intraday resistance. But we'll see. We just need time at this point. But we are in positive gamma, so the opposite of yesterday. So it wouldn't surprise me if we're going to stall. It's like we stall here, but I wouldn't see us making a major turn. As far as the bears go, the bears would have to, do some work and kind of break this trend line. If they don't do it, then they're not interested in controlling the structure. Okay, so we're trading right at that 50% ATR to the upside. Hopefully that provides a little bit of resistance. I don't want to see price ripping up here to all-time highs. So a little resistance would help. Okay. So while we let time hopefully work in our favor, let me see here. What other highlights? So watch list Wednesday. So we had a pinch point scanner class yesterday, and we had a busy session. I posted this for pinch point members. If you have my pinch point, we put some pending orders together yesterday. This one just got filled this morning. So this one is filled. All these others are pending. And we are still batting about 85.3% winners. Portfolio's up almost 25K. And we just have some good risk-defined trades. So I did a nice training session on that yesterday, plus live trades. What I'm going to do for today is let's talk some waterfall income. I just posted those updates. So I've got 4 trades in waterfall income that I'm looking to close out for profit. I mean, if we don't need to close them. Like if you want to let them go all the way to expiration into the end of October, into November, we have a 99.5% chance profit on those trades. Okay. But for me to grab an extra 5 cents of credit and wait 30 days, if I take the profit and I get 90% of my max credit, I'll move on. It's more capital efficient, and that frees up some buying power to go find another trade. So I want to talk about that today. What I will do is I'm going to sprinkle in, I can't do it today, but I'm going to sprinkle in a waterfall income training session. Let's do a Thursday and Friday. So if you'd like to join me for a 2-day masterclass this week, I will do. So Dion, I'm adding these to the calendar. So I'm going to do a waterfall income 2-day masterclass. So Thursday, 1 p.m. Eastern time, and Friday, 1 p.m. Eastern time. Okay. So if you'd like to basically swing trade the indexes for a 90+% chance of profit on every single trade, it's a pretty good strategy. It's low maintenance. And we have 2 core strategies that I teach. So I will do a strategy 1 discussion tomorrow, and I will do a strategy 2 discussion Friday. We will also trade together Monday at 11:30 a.m. Eastern Time will be the live trading session. Okay, so this will be strategy 1 training and strategy 2 training. Make sense? So if you want to be in a class with me, this is seriously one of my favorite strategies. This is like pure active retirement for me. Waterfall income is. In fact, I can just share how much I like it. This is one of the only strategies between Project Options Edge and Waterfall Income that all of my managed accounts get every single week. Any trade I'm taking for Project Options Edge is between either a margin account, but Waterfall Income, I'm trading this for IRA accounts, margin accounts, portfolio margin accounts, every single week. That's how much I like it. It is like my go-to kind of blanket strategy where it's providing high probability income routinely. Okay. So it's also one of my favorite ways to introduce people to options. It's not terribly difficult, but I will say that strategy 1 is extremely simple. Strategy 2 is a bit more to digest, but that's why I teach them both in these workshops. Because, strategy 1 is if the market's going to melt up, we dollar cost average in using options, we get the leverage that way, and we make income. Strategy 2 is I am cautiously bullish. I think the market has anywhere between a 5, 10, 15%, buffer for error. And so I tend to trade that wide margin for error and go after consistent income, knowing I've got plenty of breathing room. Okay. The trades that I'm looking at closing orders out, there's a 99.5% chance of profit. That's likely going to be the winner. But I don't necessarily want to wait until November to get that extra, 5 cents credit when I could just take the profit, hopefully in the next week or two. That makes sense? Okay. No, Lynn, I don't. All right. So that's what's going on this week. Thursday, Friday. I'm going to add this to my calendar. Thursday at 1 p.m. So we'll do a waterfall. At 1 on Thursday and waterfall 1 on Friday. So I'll add those in. Okay. And next up. All right. So now the question is price going to cooperate for the morning? Here we go. Just positive gamma. Market super excited. Hopefully there's a call wall. So we're above the 50% ATR. It's now 10:09. Edge up, rises. Okay. I mean, are we going to try to poke all-time highs today? If we do, I hope we don't stay there. But this also is a pretty inefficient candle, just saying price action wise for the day. So if we go up to these levels, maybe FOMC kind of brings it back down for the afternoon. But right now there is not much stopping this outside of, right now at 40. Hopefully that acts as resistance. If we drift up a little bit higher, I don't love it. We want to see prices within our levels. So this is down about $50. That was a 50 by 55, 90 by 85. Okay. Just let it work. Hopefully we pull back to like 30 again, maybe back down to the pivot point around 25 again. And that should recenter the trade. The other trades I have pending 60, 65, 70, 75. Let's see. I mean, if we hit the 100%, that's 60. I'm going to bump these up. So these bear call spreads, I'm going to bump these up by 1 strike. So I'm going to cancel. I'm going to bump these strikes up and I'll update that in Telegram. So I'm going to go 65 by 70 for $1. and 75 by 80. 65, 70, 75, 80 for a dollar. Okay, I'm just going to make those 2 pending orders. So this is now updated to a 65 and 70, 75 and 80. Okay, this market reminds me of a song. Let me find it. Have you heard this song? Ain't nothing gonna break my stride. That's what the market's doing. Nothing's gonna hold this market down. Off we go. So back to positive gamma, reinforcing this zombie market that's crazy complacent. Now, granted, look, there is resistance right up here. I'm not saying this is going to all-time highs, but are we going to run up to here and then close on the day, having some resistance that matters? We'll find out. We're trading at 42. My sell level's at 50, so I want to see at least 50 respected in some way, shape, or form. That's why I'm going to move these up a little bit higher. If we are quickly going to all-time highs here at 52 or 55, getting filled at 65, 70 should be out of the way. Okay, that would be up above the 100% ATR. It should be somewhat difficult for prices to get too much higher than that. And again, for a Wednesday, it's like this isn't typically how Wednesdays behave. So hopefully we see the market, act appropriately, which is balance. Balance. Okay. What you just canceled, were they just pending? That's correct. They were pending. Yep. So they were bear call spreads pending. All I did is I shifted them up 5 points. So instead of the 60-65, I shifted them up to a 65-70. So I have 65-70, 75-80 bear call spreads. Okay. All right. So let's do this. To go along with the master classes on Thursday, Friday, let's talk some waterfall income. We're winning 93+% of our trades. We did have a bonus profit this last week, and we have more. It's like I've got I think I've got 10 stacked positions up. I've got over 10 right now stacked up, and I'm looking to start trimming them down, kind of pruning the earliest ones that are looking probable for profit. I mean, all of them are sitting at like 85, 90+% probability of profit. Some of them at 95 to 99% probability of profit. But time-wise, it's like the trades that expire in October, I want to start closing. The trades that are in November, I want to start closing. The trades in December, I probably need another 30 days or so that I can start closing those. But this is essentially index swing trading. This is one of my only strategies that I trade for every account that I manage, and I do this every single week. It is like clockwork. It's one of my favorite strategies. It's a super simple introduction to option trading. If options has intimidated you or overwhelmed you in any way, shape, or form, let me teach you some waterfall income. It's a great way to get started. It's one of the coolest phenomena in the market that I've seen for the last 20+ years of trading. I know it's good when I have Nate and Graham both telling me like, hey, look, we're going to work on doing a robot trade based on your waterfall. Cool. Compliments to me, right? Imitation's the sincere form of flattery, right? They like it. So anyway, is it foolproof? Have I won 100% of my trades? No, I've won almost 94% of the trades. So we took some losses. The losses were manageable. I can teach you how to repair those losses. We can make up for them pretty easy. We just keep trading, and there's ways to also repair. So we'll talk about that a little bit. But I appreciate everyone being here today. As always, Daily Profit Play will kind of watch for the rest of the morning. We still have time. We'll see where prices are going in the next 30 to 45 minutes. With nearly 30 years in the market, I trade everything: indexes, stocks, options, futures. I've certainly seen a lot of time in the 10,000+ hours that I've been trading and teaching. The past few months, this entire year has been a pretty crazy year. Governments around the world have been pretty reckless. The Chinese government is basically backstopping the property market and the stock market. We've seen some really good gains. If you've been in China at all, it's been a great run. Like fall of last year into now, Alibaba has paid me very well. Baidu has paid really well. JD's paid very well. KWeb, FXI, they've been great. It hasn't been easy. I've been in those stocks longer than just the last 10 to 12 months. But it's nice to finally see after a couple of years of actually analyzing the charts and finding some great support that it's kind of getting the lift that I expected. You got the Eurozone coming off of austerity measures for the first time in almost a decade. They're putting massive energy and defense spending packages together. The U.S. government fiscal spending like no other. We're operating like a 6-7% deficit, and the government is spending money like it's growing on trees, which it's not. It just grows out of the printing press. So all these are leading to inevitable outcomes.